What's up, everybody? Welcome to the LatAm Venture Capital Podcast. My name is Fernanda Sesto. I was born and raised in Uruguay, but I've been in the United States since 2019. I came to the States to study, and in May, I graduated with a Bachelor of Science in Business and a minor in Computer Science from the University of Rochester. Now I'm continuing my studies doing a master's in Business Analytics at the Simon Business School. I'm very passionate about entrepreneurship, technology, and building things. I've been involved in the startup community for about 4 years now, doing different fellowships and internships. I created this podcast because I want to empower potential investors with insights into LatAm's thriving landscape and also guide Latin American entrepreneurs through the intricacies of US VC dynamics. I interview investors and entrepreneurs to learn more about their career backgrounds, market thoughts, and provide guidance to anyone who's interested in investing in Latin America. In this episode, I talked to Ivan Montoya, managing partner of NuMundo Ventures, a pre-seed and seed venture capital fund. Ivan is considered a super angel and has invested in over 15 Latin American startups. He previously worked at McKinsey and Yahoo and received his MBA from Stanford and Bachelor's from Harvard. Hi, Ivan. How are you?
I'm good. How are you, Fernanda?
I'm good. I'm good. Currently in Rochester. Just finished the pre-fall term, so I have some downtime before the semester starts with the master's program.
Great.
So yeah, I would love to have you here. So can you just tell me more about yourself so the audience knows more about what you do and in general your career background?
Sure. Yeah. So I'll start with what I'm doing today. So I'm the founding general partner of a early stage VC firm called NuMundo Ventures, and we invest in kind of between pre-seed and seed stage Latin American fintech, prop tech, and supply chain companies. Prior to NuMundo Ventures, I've been a very active angel in Latin America, investing in over 40 pre-seed, seed stage companies. I'm originally from Colombia. I've spent most of my life in the United States, most of my professional career in Silicon Valley, working at various technology companies and startups. And, had a long standing connection to Latin America, and I was looking for opportunities to do something there. And the opportunity arose to start angel investing back in 2019. And that's how I started going down the path of being an investor and supporter of startups.
Yeah, awesome. That's great. Thank you. So yeah, as we mentioned before in our conversations, like you've been really active in the Latin American startup ecosystem for years, and you just said you started angel investing as well. So I just want to learn more about what exactly was your original motivation to get involved with the region and the founders there.
Yeah, so my original motivation is very kind of a personal motivation. So I was born in Colombia. We moved to the US when I was very young. My parents were from very large families. My mom was one of 11. My father was the youngest of five, and we would always go back and forth to Colombia over the summers and Christmas times up until 1989. And I was there when the leading presidential candidate was assassinated. And I had just finished my first year of college, and both of my parents are doctors. I was supposed to be a doctor. I told my mom that I would finish the pre-med requirements, but I wanted to learn something that maybe down the road I could help Colombia. And so I did economics, did my thesis on the Colombian economy, ended up not being a doctor, worked at McKinsey, spent 6 months in Mexico City on a project. It's kind of my way of trying to get back into Latin America. But the situation in the early 90s in Colombia for sure, but even in Mexico City, it was starting to get very violent. And so I thought my window to do something in Latin America had shut. End up coming out to Stanford for business school. The internet is booming. I end up doing all this stuff in technology. I go back to Colombia for the first time in 24 years in 2013 to visit a classmate of mine. And I remember thinking things were better, but maybe not the way I'd hoped or the way I'd remembered. And went back 5 years later when my eldest daughter graduated college, and it felt like an inflection point had happened. We went to Medellin, Cartagena, and Bogota, and it was like night and day. And I remember coming back and talking to a friend of mine Cuban-American guy who was the CFO of a company called Atlassian. He's now a venture partner at Excel. And I just felt like, maybe that window that I thought it shut, it suddenly opened again, right? And where maybe my experiences as an operator and kind of growing up professionally in Silicon Valley over the last 20 to 30 years, that maybe this was an opportunity to give back. And so I told my friend, Alex, I said, hey, I don't know what it was like to be in China in the year 2000, but I think the next 20 years are going to be very big in Latin America. We should get involved. And maybe 6 months later, he gets a cold inbound LinkedIn message from a founder in Colombia, a company called Pickup, does ride hailing on motorcycles. And I'll tell the rest of the story later, but that was sort of the beginning. I invested 25,000 into that company, and that sort of began my journey of doing stuff in Latin America. But it was very much, to me, it was like, wow, this second opportunity to potentially, instead of helping Latin America from a top-down perspective, which is probably what I thought I would do when I was in college, and more bottoms up, founder by founder, trying to help out.
Yeah, it's very, very inspiring. I really like that. Also, I was just thinking that you were in Stanford while the internet started, like the internet started. I mean, during the boom of the internet. I think that must have been a very exciting period as well. And like seeing all the tech companies starting to appear. I mean, and also thinking about now how the state of technology we have now, and having seen all the trajectory for you as someone who's been involved in Silicon Valley for so many years, probably gave you a lot of perspective and insights as well for the future.
Yeah, it's so funny. I haven't thought about the time period when I was there, but it was so new, and there were no social networks. There was no, like, all of this. The internet really wasn't there, right? I mean, it was there, but it was a very rough version of the internet. It was basically like, magazines put online with super slow bandwidth, whatever. And so I think for maybe the first year, it was almost hard to tell what was going on, right? Because but then by the time I graduated, eBay had gone public, and then we knew people, like, you knew classmates of the previous, like, graduating classes who were founders of eBay or founders of whatever, and like this, what seemed crazy at the time. And then you realize you were in the middle of something very special, right? And so for sure, I think since then, both on the way up and on the way down, the older you get, the more you realize there are these pendulums. But sometimes when there's a window, you got to go for it, right? And I think that was something, it was quite interesting to observe up close.
Yeah. I mean, honestly, kind of similar to what's happening now with AI. I feel like a lot of things are happening in the industry, a lot of new products, and people are sometimes a little bit confused of what's going on. And so even though it's completely different in terms of like the type of technology, I don't know why you gave me that resemblance. So okay, so talking about more like investing and trends in Latin America, I'd love to hear more about what your angel investing method is like, and how your experience as an angel investor shaped your perspective now as you start your own fund.
Yeah, so my approach evolved quite a bit, right? And I will have to say that I'm going to note two people who kind of created some inspiration for what I did before I started. One was a podcaster and very prominent angel investor and investor now, Jason Calacanis. So I've been listening to podcasts forever. And I remember starting to listen to This Week in Startups. Gosh, I don't know how long it's been, but like 13 years, a long time. And, just hearing his story of how he angel invested in Uber and other companies. And he came out with a book called Angel. And that was very foundational for me, right? I think it made me, when the opportunity to invest in Pickup came up, instead of it being like, should I invest? For me, it was like I had a prepared mind. I was ready to go. And when I saw the opportunity, I went forward. And then the other one I would say is a guy named Andy Ratcliffe. He was the founder of Benchmark Capital. He's now the CEO of Wealthfront. He's a professor at Stanford. And he once said about angel investing, he said a lot of things about angel investing, but some not so good. But I think I remember him saying once that angel investing was for suckers or something like that. But basically, it's super high risk. And I think he modified that over time and said that if you're going to angel invest, you need to invest in at least 20 to 30 companies. Otherwise, the risk profile is so high, right? And between the two of them, I realized that if I wanted to angel invest, or the way I wanted to angel invest needed to be systematic. So I knew from the beginning I wanted to invest in at least 30 companies. And I knew I wanted to have a deliberate process. Now, over the course of 4 years, my process evolved quite a bit. But what I can say, let's say prior to starting NuMundo Ventures, I eventually kind of settled in on this methodology. So I'll first start with kind of basic stuff and then kind of how I evaluated companies. One thing is I had a consistent check size. So that's a piece of feedback people will give, because if you're trying to say, do I invest 1,000, do I invest 5,000? That's just another layer of complexity, and just take that out of the equation. The other thing is, for your goal as an angel, and everybody's a little different, everybody's capital is a little bit different. This is no different than a fund. Like sometimes I hear the term, the fund size is the strategy. Well, it's the same thing for an angel. If you say you've got a budget of $100,000, right? Then one way you figure out your check size is $100,000 divided by 30, right? Or another way to say it is like, well, if one of them hits, what is the outcome that you want, right? And just for argument's sake, if you invest as an angel very early and you get a 50x return on something, let's say you want it to be worth $1 million, and I'm just making that up, but whatever it is, right? I remember one angel investor told me, like, it's hard enough to find one that takes off, that at least you want to put in enough capital that if it does take off, it's worth something to you, right? So between all of that analysis, I ultimately settled on $20,000 per investment. And so that was very consistent. And then my investing approach is, I think, very similar to a VC, right? So I looked at a lot of companies, tons of deal flow. We can talk a little bit about how I did that, but I evaluated a lot of companies, and I basically looked for 4 or 5 things. One general philosophy I have is that it's not just the founder that matters. Everybody talks about, I think, that the mythology of the great founder, and no doubt the founders are super important. But for me, I almost lead with, what is the problem they're solving? Is it a really, really painful problem they're solving? And how well do they solve it? Are they, quote unquote, 10x better than the alternative? That's by far the most important thing I start with. I had a meeting with the founder earlier today, and that's what we spent all our time, asking him to show me, before your product, what did your customer do? After your product, what was the impact? How do you quantify that, right? So that's super important to me. Then I get into more of their go-to-market, right? What does it take for them to be $1 million in revenue? What does it take to get to 10 million? What does it take to get to 100 million? Because ultimately, if you're going to have a venture type outcome, you've got to be able to understand that. And then getting into the unit economics, I'm very old school. I think the funding environment in Latin America is very difficult. So I like to invest in companies that have a potential to be cash flow positive before Series A. And I really admire founders who bootstrap. So a lot of founders that I back either have been bootstrapping or bootstrapped for a while. And then obviously then it comes down to the team, right? And I tend to work with founders anywhere from a month to 3 months, helping them before I invest. And that's an opportunity for them to evaluate me, but also for me to understand how they operate and get more conviction on what they're doing. So anyway, I said a lot, so let me pause there and see if you have any questions.
Yeah, no, thank you so much. I really like the way you like I think it's very important to like understand the strategy in the way that you know, as an angel investor you can operate alone, and then also have a good, yeah, have a good vision of like what are you looking for. Like for example, you just mentioned that you don't look necessarily so much, it is important like the team and the founder, but most important the problem. Like the problem is like at the end of the day what's gonna make a difference in the market and how they're solving that, how, their approach. I think sometimes in VC I hear a lot that the most important thing is the team, which I understand why, since like I guess like there's a lot of like assumptions made at the beginning, so it's harder to quantify things. But definitely like I guess like looking at and being able to understand the problem and the solution that they're proposing is also really like critical. So thank you. I really appreciated that. So in terms of like your thesis, you focus a lot on fintech, prop tech, and logistics and commerce as well. So how was your process of defining that, and what aspects did you take into consideration when you were looking at that, especially in Latin America? I know fintech is really big in Latin America, so kind of have a background in that and understand why, but I'm curious to know more about prop tech and logistics.
Sure. So it was a very organic process for me, right? When I did that first investment in 2019, I was open to investing in being an angel investor in Latin America, but by no means, you know, I had a day job. I was working at a startup, and so I didn't have a master plan that says, "Hey, these are the three sectors I'm going to go after." But it was, I would say, the first year was very informative for me, because the more founders I met, the more obvious it became to me certain areas of the economy that had tons of friction. So let's just talk about logistics, supply chain commerce, right? So this first company I invested in was Pickup. And through Pickup, I learned how bad traffic is in Latin America on a global level. It was like out of the 10 worst cities with traffic, there were 5 of them in Latin America. Bogota apparently is horrific. And, you know, this company was focused on helping essentially people with less income who, you know, they get on a bus in Medellin and maybe it takes them 2 hours to get downtown because of all the stops and the traffic. If they took an Uber, maybe they cut out 20 minutes of that commute because they don't have all the stops, but it still takes them a long, long time. And then for the price of a little bit more than a bus, they get on the back of a motorcycle and they're downtown in 20 minutes. And so that started the initial spark of like, if it's that tough to move people, how terrible is it to move goods, right? And then I met a company called 99 Minutos in March of 2020, so right before the pandemic started. And their whole idea was e-commerce delivery. And so I'm like, e-commerce is probably growing. I'd heard of Mercado Libre. How do they actually get goods from point A to point B? Is there a UPS? Is there equivalent infrastructure? So my hypothesis on 99 Minutos, they want to build the UPS of Latin America, right? And so you start doing more and more of this, and you realize like the supply chain at all levels had friction, not just kind of on traditional delivery, but also companies like Nowports and Nouveau Cargo and others around trade, right? And then the other one, I would say prop tech, kind of a little bit fintech, same thing. I remember hearing the story of somebody from the US. They moved to Mexico City, and they said it took them forever to rent an apartment. I'm like, why? And he's like, first of all, it was horrific. It was hard to tell what was available, what prices, whatever. So I'm like, that's interesting. And then, but the bigger thing was they had to get like somebody to vouch for them. Like, and it couldn't be like a family member. It was like this, I think something because there isn't a good credit scoring system and whatever. And so you had to go find somebody to say, hey, this guy's good for the money. You can trust him, whatever. And I'm like, that sounds like a nightmare on something so basic, but so fundamental as housing. There's all this friction. I'm like, not to say in the US, I think there's tons of friction still in the housing, but I'm like, okay, that's the biggest asset class. It's one of the most fundamental human needs. It's almost like the Maslow's hierarchy of needs for me. It was like, let me start with the things that are most fundamental, that have a lot of friction and where there's lots of opportunity. And as an angel, I need to focus on something. And so that's what I did. So it was a little bit bottoms up and then some
Mhm.
self-reflection.
Yeah, no, I mean that's I think the property problems, like the PropTech companies are really solving a key issue in Latin America. In Uruguay, I mean, where I'm from, at least, it's like very hard to find rentals or like to find properties for sale. Kind of like it works is like you just walk around a neighborhood and see what like the banners are that says for sale. It's like it's very hard. So definitely it's a key problem there. And then for the commerce aspect, I think it's interesting because commerce is growing. And I think fintech is enabling that. The fintech growth in Latin America has enabled so many other industries. And so, like, my next question is actually about that. So, I mean, fintech is the largest vertical, like, and it has received so much funding, especially in 2021. So what do you think is the next vertical that's going to have this amount of growth in Latin America? So, like, I guess like related to trends as well. What are your thoughts on that?
Yeah, so this is somewhat speculative because I feel like, especially with as a solo GP and as an angel before that, I need to focus, right? And there's still so many opportunities in the three areas I focus on. But one area where I've been open to meeting founders, and it's somewhat out of my scope, but it seems like a big trend is, I guess, what you'd call vertical SaaS, right? So people building software for specific industries. So it could be healthcare related, right? It could be, like try to make it easier for people to book appointments with doctors, to software to manage physician practice organizations, to fintech solutions that are focused on, in this example that I'm giving, healthcare. But it's in other industries too. Like I talked to a company a couple of days ago that's like supporting private schools, right? There was a firm in Mexico, I think, called Matilda, which is more of a fintech, I guess you could argue, a vertical fintech, where I think they're helping tuition payments and things like that. And you start going into some of these markets, and it's like, wow, that's a big market, right? And I'll do one example from the US. Toast, right? It was a software for restaurants, right? Point of sale software, and then they just expanded and started doing payments. But so I think vertical software, vertical industry specific software is already growing. I'm guessing it's going to grow a lot, and it also overlaps with fintech. You have some fintechs that start off as a fintech. Let's say there's a company that I'm familiar with in Colombia called Fincargo, and they focus on trade finance. So people who are doing shipments to China, back and forth with Latin America, wherever the trade route might be, and so they do some financial products so that the shippers or the carriers get paid better, and but then it turns out they can build some software around it that are more into the workflow, like how do you ship and schedule and so on. And so you can sometimes start with a fintech product and then start adding software around it. But I think the whole vertical industry software is going to be a bigger trend in Latin America.
Awesome. Yeah, I love that question because I learn a lot about different perspectives from different investors. And I think I've definitely SaaS is like a big thing. And I think definitely for Latin America, it's important as well because it would enable the growth of many other industries and companies that would, in return, maybe create more opportunities for other things to emerge. I also learned that recently that the creator economy is actually growing a lot as well in Latin America because Latin Americans are one of the largest consumers of social media content. So I think there's also opportunity there. I don't know if you know anything about that, but it's
Yeah,
very
I've
interesting.
actually met with several founders in the creator space. Brazil apparently is like one of the top
Mm.
markets in the world for TikTok and all of that. Um, I don't play in that space, and it's not to say anything negative about it, but I think in anything, my perspective is it really there's value in at least getting some level of specialization so that you see enough companies in the space. You can actually help founders because you're seeing a lot of trends, and you can, but more as an investor, you can realize what's an outlier versus not, right? Like somebody, wow, I've seen 15 creator tools companies, and this one is different, right?
Yeah.
But for sure, I've been pitched a lot of creator economy related things, and I'm sure there's going to be, hopefully some really interesting companies in Latin America.
Yeah, and I think what you just mentioned about the being able to identify outliers comes with also like kind of like the art of venture investing, which is like pattern recognition a little bit. And it goes perfectly to my next question, which is like, what are some unique characteristics you see in Latin American founders that you don't necessarily see in the US? It's a tough one.
That's an interesting question. Um,
If you see anything, you might not see. It can be negative,
the
positive.
reason I'm pausing on this is I sort of believe, well, I guess I can answer that in a cynical way, or I would say in what I see, right? But the cynical answer, or maybe the trite answer, is that founders in Latin America are having to deal with more hardship, and the funding environment has always been less uncertain, so they're more resilient and all that. And I think while there's some truth to that for sure, I think the really great teams look more similar than they look different, right? I know, Fernando, you and I've talked about this founder before, but I invested in a 20-year-old founder who hadn't gone to college and was just phenomenal. A founder who was super thoughtful, right? Very competitive, but humble, right? And just got stuff done. And the reason I ended up backing them, aside from understanding the market opportunity and the product that they had, was he reminded me of a founder in the US who had a totally different background, who went to MIT, who went to Stanford, who had, in theory, all of these privileges that this founder in Latin America did not have. But yet, to me, they were very similar. And that's what gave me the confidence to back this young person. So I would make the argument that oftentimes really strong founders and executives they're more similar than they are different. To me, it's like a sport or being a musician, right? Like, is Maluma as a musician in Medellin? Yeah, how is he different than, I don't know, Drake? I don't know. They're different, but they're musicians, right? They have a certain way of doing things, and I think when you work with very talented people, I don't care where you're from. You could be from, Timbuktu, and you might recognize somebody and say, "Oh my God, that person's incredible!" Right? They're so effective. They're whatever these skills. So for sure, they have to be resilient. And if you have somebody from Argentina, I'm sure they've seen everything. And why I think there are some countries where you see disproportionate number of entrepreneurs because they've had to deal with a lot of uncertainty at a young age. But when it's all said and done, I think strong executives are strong executives.
Yeah, and I think that's a really good perspective also because I've read so much about implicit bias, but not from like an outsider perspective, but when you yourself know this, like, oh, I come from this maybe not so privileged background, and you have your own bias about how people are going to perceive you, and that can sometimes not encourage you to take risks or start things. But if you understand that no matter like where your background is, what your background is, and you still are able to achieve same amount of results or traction as someone who has all this privilege, then you have a lot of potential and like strength as well. So I think I just asked the question because I think there might be differences, but yeah, as you said, like similarities also play a big factor, and it helps to reduce that bias that sometimes we have.
Now, here's what I'll say. Like, I'm an N of one, right? So I'm not sure I'm representative of the typical investor, and I may not be And I would go so far as to say I'm definitely not representative of the typical Latin American investor. I do think there's no way around it. Latin America is a very status-driven society, probably like every society to some degree. But I think one of the benefits of operating in Silicon Valley for so many years is that, here at some point, it's about the numbers. At some point, hey, whether you're an Indian founder or whether you're an American founder or whether you're a Latin founder, if you're solving a problem that's very interesting, you're doing it in a unique way, and the business is taking off, capital will flow wherever somebody's doing something very successful and interesting. But I think in the earliest stages, when you don't have those signals, when you don't have the 5 years of revenue metrics, or you don't have all of this, then that's when bias creeps in, right? Because if you are, if your frame of reference in Latin America, let's just say, it's ironic because I'm the one saying this and I have a lot of these credentials, but if your point of reference is like, well, yeah, the only big exit, let's say 10 years ago in Latin America was Mercado Libre or something like that, and the founders all went to Stanford, whatever. Well, if you're an investor, what do you look for? Okay, where did you go to school? Did you work at whatever, right? And it perpetuates itself, right? And if you're launching and you haven't launched, your pre-launch, your PowerPoint stage, at that point, well, this person went to this school, this person went to that school. So I do think that there is still a ton of bias, but I think this is where hopefully we've got some new investors coming into the ecosystem like myself. And I do, it's hard. I don't want to sugarcoat it, right? Because I think there was, during the bubble period, there was this, in addition to the mythology of the importance of the founder, which again, super important, but I think it might be a little overdone, was also the idea that everybody could be a founder. And that's absolutely not true. I could never be a founder, right? It is hard. It's like saying everybody can be an Olympic athlete. Everybody can play an Olympic sport, but how many people make it to the Olympics, right? And so whatever your field is, it's hard work, right? But I think I'm hopeful that over time, it's more about performance, right? But for sure, there's still a lot of bias, no doubt.
Yeah. I personally hope that as we have more data-driven techniques that can analyze more like qualitative data, not necessarily, those metrics, like very rigid metrics that we don't have in early stage, then we can start detecting maybe some qualities in founders that, can represent the majority, and not just like the very minority of people who just, go to like very privileged schools and then have all these resources available to them that allow them. But it's hard. It's a hard topic. I'm very interested in it from a technical perspective, because there's also the data is biased already, since most of the founders that are successful did have maybe like a school in common or stuff like that. So how do we measure that? But yeah.
I'll say one last comment. Comment. That's no different if you were in Silicon Valley in the 1970s. Who were all the startups? There were startups from semiconductor people who worked at Fairchild Semiconductor, whatever. So if you did an analysis of like who was successful, you'd say, oh, you have to have a PhD in some engineering or whatever. And then all of a sudden you get Steve Jobs, who went to Reed College and studied liberal arts. Now you're thinking, well, was that an outlier or is there something there, right? And then you start to get more and more profiles as the ecosystem matures and develops. And so I think we're still fairly early in Latin America. And I'm hopeful that in the next 10 years, you're going to now start to see a lot of different types of founder archetypes that were successful. And then now it'll be like, well, yes, somebody from this background can be successful. Here's 5 examples. So I think it's a maturation process as well.
Yeah, great insight. So last question. You don't really come from a family of investors, as you mentioned. Your parents were in medicine. So I also don't have anyone in my family in the finance industry. So what type of, or like, what is some advice that you would give people like us, like young people who are interested in investing in Latin America, working with founders, especially underrepresented groups, as we were talking, who are trying to break into VC?
Well, so I guess there's two ways I would come at this. Number one is you got to make sure you really want to do this, right? Like, and why are you doing it, right? I mean, I think there's some, like I said, there's some glamorization of all of this, and it's actually not that glamorous work. It's like I keep going back to the athletic analogy. Like, what if somebody said, yeah, rowing, Olympic rowing is the best thing possible, and they make movies of Olympic rowing, whatever. I challenge you to go row. It's a pretty hard, exhausting thing, right? To go in there and do that. And so I think you need to make sure you're doing it for the right reasons, because startups are very unpredictable. It's probably on average, if you're a founder or an operator, odds are it's not going to work out that well, right? And so I would encourage young people to get a few experiences in the space, whatever it is. If you want to go work at a startup, go work at a startup. If it's doing something in finance, make sure you enjoy finance, right? But assuming you do that, and this is an area of true interest and curiosity, I encourage people to network like crazy, right? Get to know other people, go to events, whatever, right? Because a lot of what happens in this space is serendipitous. You know, if you're an investor, the best way to make better investments is meet a lot of founders, because maybe you meet this founder and it's not the right one, but you learn something from that one. And they say, hey, let me introduce you to my friend who's doing this. And then that's the one that ends up working. Same thing, you know, in VC. I've seen young people who start in one area of finance, but they want to get into VC. So they meet all these people, they get involved in all this stuff. And then all of a sudden somebody says, you know what, there's a analyst position opening up. You know, you should apply, right? You don't even know that analyst position is even available if you don't meet people, right? So I would encourage you to network a lot.
Yeah, networking is always key in this space. Always get that advice from investors, from everybody. It's cool. I think it has a lot of power, but also I think a lot of people feel a little bit awkward networking. So I guess like trying to like get more comfortable with it, think about more like of a learning experience and not just, you know, actually be genuine about your interest with the person, not just for the sake of.
And this is, you know, I'm actually quite an introvert. I think like in the definition of introversion, I think is you get your energy from within, right? You know, maybe ideas, thoughts, what you read, whatever, as opposed to maybe an extrovert maybe gets their energy through other people primarily, right? But in what I do, it's nonstop meeting people, right? And I think for me, you made a comment that I think is super important. This is general life advice, unsolicited, but I think you're happiest when you're doing something that you're inherently curious about. They're like, I want to learn more about that, right? And so for me, in terms of networking or meeting founders or meeting other investors, I'm genuinely curious. You know, you want to learn, like, oh, what do you do? Oh, that's super interesting. Why do you do that? Wow, how did you get started? Right. And if you feel, you know, if that gives you energy to be curious, right, then it's a very genuine thing. As opposed to, hey, I got to go to 10 parties and hey, how are you doing? You know, whatever, it's super awkward, right? It's take it more of a learning experience, right? And try to, you know, go to an event or meet with people. I take so many lunch meetings, and there'll be operators of all types, whether they're raising or not raising, and I'm learning. And my idea is like, hey, this person, maybe a year from now, I can help them connect with somebody, or a year from now, they can help me connect with somebody, or a year from now, I can put two and two together, and that comment that came up in this meeting will be useful for me in some other place. So if you view it from a learning perspective,
Yeah, exactly. That's how I do it as well. Cause like I used to feel a little bit nervous about networking, especially when it's like cold outreach. But since I started thinking about it from like a learning mentality, and it's like I just want to learn about what this person is doing, about how they got where they are right now. It's just way less nerve-wracking, and also it's actually like interesting to hear, and like it's what I'm actually curious about. So yeah, well, thank you so much, Ivan. This was really interesting conversation, and I really appreciated that you took the time to join the podcast.
Yeah, no problem. And thank you very much, and good luck, Fernanda.
Mhm. I really, really like this conversation. I think Ivan has a really interesting perspective about Latin America, and especially because he's worked in Silicon Valley. He has this experience as investing in working in the United States, but then also he has this cultural and personal background that connects him to LatAm and allows him to understand why Latin American founders are so special. Um, and I think it's very interesting also how he sees similarities more than differences between both entrepreneurs in the United States or all over the world and Latin American, which I honestly find that very like a very good point, because at the end of the day, these people who are entrepreneurs and starting companies and following their passions and visions, they all are very driven by that, and those are the ones who are going to change the world, right? And that's why we love to work with entrepreneurs. So yeah, I hope that you had a fun listening to this episode, and come back next week for more.